All right. So this is the full video on my strategy, and it's going to be an elaborate video concerning my strategy from the bias part to the ending. This video is going to be quite long. The strategy I actually choose is a hybrid strategy. I've tested this strategy over in so many markets, on forex markets, on stock markets. It works. It actually has a 78% win rate. Yeah, 78% win rate. So right now, I will just capture what you need to know first about the strategy before we can commence on it. All right. Firstly, the strategy is quite easy. Strategy is quite easy to understand, but the thing is grabbing it is the issue now. All right. Firstly, the first thing you need to know about this strategy is the bias part. The bias aspect of this strategy is the most important part of this strategy. Without the bias part, you can't excel in this strategy. Number one is the bias, the directional bias. Bias. Then number two is your draw on liquidity. Number three is your market structure. Market structure intent. Number four is liquidity. It's liquidity in premium. And number five is zone. Then the last part is confirmation entry. On M5 or M15. This is quite the hell we are going to face here. The first one is directional bias. Second is draw liquidity. Third is market structure entered. Fourth is liquidity in premium. Fifth is zones, and the last is confirmation entry. Alright, without wasting further time, let's go over to our directional bias part. What is actually directional bias? A directional bias is what tells you where price is heading to. It's what tells you where price is heading from and where price is heading to. As a trader, I use the Malaysian support and resistance storyline to tell me my directional bias, and the storyline actually starts from the daily time frame. There's the analogy of it. So just imagine this is the chart now, and this strategy is actually for advanced. It's not for beginners. You get, it's not for beginners. The course is actually for advanced. So if you're a beginner, if you don't know what support and resistance level is, you need to know what it is before you can understand here. So just let's say that this is a daily resistance, and all we need to see is, I need to see, the first criteria is the resistance level, fresh level. Yeah, you should know what fresh level is. That's the first criteria. The second criteria is I want to see market I want to see a candlestick close below. I want to see a candlestick close below this resistance level. Yeah, this is a candlestick. I want to see a candlestick close below this resistance level. Then next, I'll see my breakout on the 4-hour time frame. So this SNR and rejection happens on the daily time frame, while the breakout happens on the 4-hour time frame. And what you should note about storyline that if you see this stuff, if you see this whole stuff now happening, it's actually predicting the next daily candle. That's if I see a storyline today, that storyline is going to tell me if the next day is going to buy or sell. So if I see a bearish storyline, I know tomorrow is going to sell. If I see a bullish storyline, I know tomorrow is going to buy. So let's go onto the chart to spot this. So remember, your rejection and breakouts all happens where? In the higher time frame. So let's start from somewhere nice. Like if you look here now, this is a bullish and a bearish candle. This is a resistance level, and you see what happened. Price close here below this resistance level. Yeah, price close here into this resistance level, this candle. Let's go and check whether a breakout happened. So this is where it's tapped. This is where it tapped. So the thing is, actually where it tapped, you are going to find a breakout. Let's mark where it tapped. This is where the day started. That's at this line. Then where it taps the SNR level is here at this candle. So you're going to put a vertical line at where it tapped the SNR level, and you're going to find a support level for it to break behind. So the thing is, the reason why you're finding support level for it to break behind this side is because you are finding external breakouts. Any breakout that happens inside this price, it's an internal breakout, and we don't trade internal breakouts. And any breakout that happens after, that's behind the left side of the chart, is an external breakout. We trade in external breakouts only. So let me recap what I said again. Firstly, you need to see a rejection and a breakout. Yeah. So what happened? This is an SNR level here, and price rejected it. Let me make it clear. Price rejected it, this support level, and we'll mark our line as where price rejected it. Then we'll go to the 4-hour to find our breakout. Cool. Now let's go to the 4-hour to find our breakout. Before you find your breakout, you have to mark your place where price touched the SNR level, which is here, and we need to find the breakout that occurred this place, not this place. You get after the vertical line. So where is the breakout? The breakout occurred what? The breakout occurred here. You get? So it's very easy. Break of a if you say bullish storyline, your breakout must be a break of a resistance level. If it's a bearish storyline, your breakout must be a break of a support level, which is a V level. So this is the external breakout. And one rule about storyline, let me make this clear. One rule about storyline is if your breakout happen that same day, it's a high probability storyline. If the breakout happen, that's after the rejection, if it happens that same day, it's a high probability storyline. Then if it happens the next day, it's also high probability. You can take it. But if it happens a day after, that's 3 days after the rejection, we don't take that kind of storyline. You get? So you need to be on your chart looking at storyline for directional bias. You get? So that's for the storyline, rejection and breakouts. So now, how do we know storyline has ended? We know storyline has ended the same way it starts. A storyline ends the same way it starts. You get? So right over here, the storyline was quite bearish. Bearish storyline started here. Before it became bearish here, it was bullish at this side. If you look, you can mark out this SNR first. Level 1 SNR. It's rejected here. If you put your price here to find for bullish breakout, let's go check out for bullish breakouts. So remember what I said. This is where you tap the SNR, put your line here to find your external breakout. Then this is your external breakout. A bullish storyline started, right? So when the bullish storyline started, we were going up until we now got to this storyline, got to this resistance level, which actually brought price down and changed the direction of price to do what? To become bearish. So a storyline ends the same way it started. Now there are some scenarios when you see your daily reject daily. Yeah, you see your daily reject daily, but the breakout is extremely far. What do you do in that case? And this kind of scenario is actually advanced, but I will just say it. I can't spot it right now. The thing is, if your breakout is so far, something like we have this rejection right here. We have this rejection right here. Let's mark it out. We have this rejection right here. Right? We have the clear rejection. So let's say price is approaching something like this, and the next support level for it to break is over here, and price is currently here on the 4 hour. That's, this breakout has to happen on the 4 hour. So we don't have to wait a long time for it to break this resistance level before we can say it's completely bearish. What we do is we go over to the 1 hour time frame and check for a breakout with a wick. That means we check for a standard breakout on the 1 hour, plus it must also break the wick. If I say I want to spot it right now, it will be quite difficult, but maybe I will do it on another time. So that's for the storyline. Good. That's for the storyline. So we have fulfilled one version of my video, which is what? The directional bias. Yeah, directional bias. Cool. So that's for the directional bias. I'm just putting all the pieces together. Then maybe I will do a setup. I'll do a setup after I put all the pieces together. So my strategy is, once you find your directional bias, now the question is, after you find the directional bias, where is price heading to? Where is price likely to reverse from? That brings us to the second part of the strategy, the draw on liquidity. Immediately you find your storyline, you see that maybe your storyline is bearish, you will need to find where we attract price. That's where you know that price will head to. That's your draw on liquidity. You get? So once you spot the draw on liquidity, you will now wait. You will now, that price is going to get here. You are not waiting. Actually, you are going to know that yes, price is going to get here. So how do you spot your draw on liquidity? Let's say your storyline is bearish, right? I love using bearish scenario because market is currently selling now. Let's say we are bearish now. We are currently bearish on the storyline. We know we are bearish. So what do we do? How do we know it's going to end? Here is how the draw liquidity works. The draw liquidity works on strong highs and strong lows. So if we are bearish, price is always going to wipe out strong lows. And if we are bullish, price is always going to wipe out strong highs. You get? So the thing is, if we're in a bearish storyline, we are going to go to the other side of the chart, that's this side of the chart, and find strong lows for price to sweep down, because those are the places we know that price will head to. And the thing is, if we are actually bearish, strong highs are going to hold, while strong lows are not going to hold. Rather, they will always tend to reverse price. So now, how do we identify strong highs and strong lows? It's very easy. It's very easy. If you know market structure, you will know strong highs and strong lows. So how do a strong high form? You know your normal bullish. That's why I say this class is for the advanced. Higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. So we know that, yeah, currently this place is a higher high, higher low, higher high, higher low, higher high, higher low, higher high. You get? So that is just normal market structure. But advanced market structure, we tend to look at strong highs and strong lows. So how do a strong high form? A strong high, or let's use a strong low for example. A strong or strong high, anyone. A strong high is a high that swept a current swing high and caused a break of structure. You get? So like it sweeps this high here, good. It sweeps a swing high and it caused a break of structure right here. That's so this place currently is what? A strong high. How do a strong low forms? Is also the same. Price will always tend to sweep a swing low and cause a break of structure to the upside. Sweep of a swing low right here. I'm not drawing this nice. Sweep of a swing low and what? A break of structure. Yeah. The kind of break of structure, we have external break of structure, we have internal break of structure for this strong high and low. Now let me explain what is external break of structure and what is internal break of structure. When price has swept this swing low like this, it's either you see that price breaks this low right here and leaves this low like this low might be like this, or if this low that price swept, the high is above here like this and price sweep this low, that makes it an external break of the sweep. You get? So it's high probability when price makes it an external break, but we also can take internal breaks as this one. You get? So let's go fight strong highs and strong lows in the chart. I'd rather do this on the 1 hour time frame for us to get better examples. Alright, you can see currently as the market is going, this is a swing low right here, and what the price did, price swept this swing low, and after price swept the swing low, what did it do? It caused what? A break of structure. So when price always sweep a swing low and cause a break of structure, what is it called? This place is called a swing low. You get? So just imagine that we are bearish on the storyline, and let's say price is here, price is here like this, and we're bearish on the storyline. What is price going to do? Price is going to target this swing low. Always price is going to target this swing low and likely do what? And likely reverse. You get? So we're not going to wait for price to come and take this swing low out before we can find setup. We will always find our sell setup since our directional bias is selling. Yeah, it's only when we want to counter trade that's when we can wait for price to sweep this swing low and wait for confirmation to enter. So let's find more swing points. What is this? This is a swing high. Price swept the swing high. After sweeping the swing high, price caused what? A break of structure. So you can see it. It's nice and clear, right? Nice and clear. And this break of structure is just not a normal break of structure. There's also another one here which is high probability. You get? Yeah. So that's strong highs and strong lows. Is very easy to spot. So now going back to our what we were saying before, we're talking about draw liquidity. So let's say your storyline is bearish, right? Your storyline is bearish. So where do you expect to target? You expect to target what? If your storyline is bearish, you expect. I know, and this I'm using my phone to do video right now. if I have my laptop, maybe I'll be typing all these rules out and make it a better video, but it's my phone I'm using. I'm sorry. So the thing is, if the storyline is bearish, what are we doing? We are targeting what? Strong lows. And let's say strong lows, you find the strong lows at the left side of the chart, that's this side. So what you do is price swept and cause break of structure. So this is the place you are targeting. And where do we find these strong lows? What time frame do we find? You know that the storyline, we find it on our daily time frame and the breakout on our 4 hour. So where do we find these strong lows as our targets? We find it on what? The daily time frame, the 4 hour time frame, and the 30 minutes time frame. You get the daily time frame, the 4 hour time frame, the daily time frame, the 4 hour time frame, the 1 hour time frame, and the 30 minutes time frame. So we are looking for strong lows as our target. Yeah, you get. So let's go see an example of the storyline I gave previously. Let's go see. Oh my god, the chart is somehow now. The chart is somehow now. The chart is somehow now. Alright, we give a storyline right here. I don't want to clear the chart so that these writings will not leave. So the storyline here is currently bearish. So bearish to where? So the strong lows and strong highs. So imagine the storyline started here, which was a bearish storyline, and I said we can find strong lows and strong highs from where? From the daily H4 and H1 and M30. So now looking for your strong lows since we are bearish. What happened on the daily time frame? This is what happened: a sweep of liquidity and what? A break. You get sweep and break. Oh my god, this thing has started. Sweep and what? And break. So this strong low right here is our target after we find the storyline. I know it will be a bit confusing, like really what I'm saying right now may not make sense to you, but if you master this thing, like I'm not good at explaining though. So you can see that the momentum was actually bearish, really. It's after it came to this strong low, that's when this reversal, this small bullish reversal came up. You get. So not only on daily time frame that you find your reversals from, that's your strong lows as drawn liquidity, you find it on H4 M30 H1. You get H4 daily M30 or H1, any time frame you can find your drawn liquidity. So let's go over. I remember your drawn liquidity is where you expect price to do what? To reverse from. So the storyline, remember, the storyline started from here, and if we say we want to find draw liquidity from the other side of the chart, where is the sweep and break? Where is the sweep and break? The sweep and break currently is this one, and it's also the same with the daily time frame. So if we go over to H1, then go back to H1, what is the sweep and break? We can't see a sweep and break. Remember, this is where the storyline started from. We are looking for draw on liquidity, sweep and break. I would have considered this, but no, this is not a sweep of a swing low. This is not a swing low. This is the swing low. So price did not do any shit here. Or I could take this as a swing low sweep of this swing low. Then the break of structure will be here. Yeah, you get. So I can consider this as a swing low. So I can mark here as our price target. Let's see if he did any reaction. Can you see? This is our strong low right here, and the storyline was correctly bearish. So when price got to this strong low, can you see the rejection? At least it gave us a tiny reversal. You get. So that is how we do it. Also here, oh, this is a double top. This one is sweep and break. It's a double top. That's why price really, it gave us small reaction on this side though. This is the double top right here. Give us more reaction here, but it's not valid. The main one was after price swept this thing on the daily, and it gave us a bullish momentum. Yeah, you get. So that's about the draw on liquidity. I guess this my video is getting fucking long right now. Sorry for using the earphone. Um, I my strategy is a bit complicated for those who like find it hard to grab things. But by the grace of God, I will make sure I break it down for you. You get. So after, let's go back to our stuff. After you find your direction, what's going on? After you find your directional bias, you find your market. You find your directional bias, you find your draw liquidity. The next stage for you to enter is your what? Is your market structure intent. And the market structure instance is like almost the same thing I explained to you just now. Let's say that now you know that today's storyline is bearish. Today's storyline is bearish. Today's storyline is bearish. So what you need to do is you need to find sales. You need to focus on sales. The only way we can look for buys is when price have already gotten to a strong low that it needs to sweep and reverse. That's when we can look for buys. But if the storyline is bearish, you focus more on sales and focus less on buys. Only when we see confirmation on on the sweep of the strong lows, that's when you can focus on buys. Yeah. So storyline is bearish. What do we do? Find sales. So how do we find sales? Remember, this thing I'm about to do, that's this market structure intent, happens on the 4 hour, the M. You should be jotting this down. This market structure setup now, that's our setup. It happens on the 4 hour, the M30, the 4 hour, the 1 hour, and the M30. We don't go to M50, M5 or M50. M5 or M50 is for confirmations. So what do we do? This is what we are bearish, right? So we need to see a sweep of liquidity to the upside and a break. You know, normal mentors will tell you market structure, higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. This is how you trade structure. This is a break of structure. This is a break of structure. Price will pull back. When the price pull back, there's a POI, breakout block, or in other block for price. So I don't trade like that. How I trade is I want to see a good market structure intent. What I mean by good market structure intent is that I want to see a sweep of liquidity, and it's still the same thing as a strong high and a strong low stuff. Sweep of liquidity and a break of structure. The break can be internal or external, anyone. You get. So remember, one thing you will observe here is we are in a bearish storyline, right? Since we're in a bearish storyline and this is a strong high, price might not likely sweep a strong high. Why? Because we are bearish. Price will not like to take out strong highs because we are bearish. Rather, price will take out strong lows because we are bearish. Strong lows. That's our draw liquidity. You know your strong lows now. Sweep, sweep, and break. You get. Price will always tend to take out strong lows. Why? Because we are bearish. You get. Price will always love protecting strong eyes. You get. So that's just the ideology of this strategy. And yeah, so now what you need to do is for the setup is that you need to find your strong intent. That's this bearish intent. This were bearish. You get. And you can find the only bearish intent by looking for what a sweep of a strong piece of a swing high and a break of structure to the downside. You get. Once you see this, you know that yeah, 70% of my setup has showed up. Or will I say 70 or 50? Yeah, 50% of my setup has showed up. For it to enter 60%, you have to see a retracement to the upside. A retracement to the upside. That means what happened here? A strong high has been created, and what? A low has been created. So what do we call this? I call this what? My structure range. my market structure. I know people will say range is consolidation, but I call it range also. My bearish intent range, anyhow they call them. So this is what I need to find. And most of the traders, we don't actually trade. One thing about trading and one thing about technical analysis is that when you are doing analysis, you need to know the psychology behind your setup. You get the psychology behind your setup. Most traders just trade the pattern only. We know that this is sweep and break, or yeah, let's go find sweep and break. No, if you know the psychology behind the setup, you know that on a norm, if I explain this now, we know that we are bearish, we have taken out liquidity. Price. This sweep and break theory is also called stop hunt. You get, it's also called stop hunt. Price did a stop hunt. What is this thing? This actually now is a resistance level. You get, right? This is a resistance level. So institutional traders will always like to sweep out resistance level and sweep buy side and also sweep sell side. Once you see this thing, price sweep buy side and sweep sell side, you know all price want to do, price wants to go down. So before price goes down, it has to sweep buy side and sweep sell side, and that is exactly what is here right now. Exactly what is here. I said price sweep buy side before he sweep sell side. Now he's going down to retrace up. It has to retrace up first before it goes down finally. That is the psychology behind the setup. You get, it's not just trading sweep and break pattern. You get. So once you see your sweep, your break, mark the high, that's a strong high, mark the low. And one thing about this low, this other low setting that we are bearish, so one thing about the low is that for you to confirm a structural point, that's a swing high and a swing low, the pivotal point, the best way to do it is if you go to a lower time frame. For example, now you find your structural intent on the 1 hour, that is this sweep and break. Now this sweep and break, you find it on the 1 hour, and you see price is already retracing a bit. That's this retracement. Now this retracement, price is already doing it a bit. You want to confirm if this low is actually valid. What you need to do is to go to lower time frame, let's say 15 minutes or 5 minutes or even 1 minute, to check for a market structure shift to the upside. If you have confirmed a market structure shift to the upside, you know that yes, price wants to do a retracement. Price wants to do a retracement to fill orders here before it goes down. You get, price wants to do a retracement before it goes down. So that's about marking your structural intent. Your structural intent, it is very simple. Like, it is too simple. If you don't understand it, I will do another video again explaining it one by one. So once you find your structural intent, that's what is that, my flow chart? Directional bias, draw on liquidity, market structural intent. Next thing is liquidity in premium, but let's talk about the premium first. So now, what is premium and discount? In premium and discount, we use what we call the Fibonacci tool. I know now, like this, your head go just the boss, like this boy, your strategy is too rigorous, we need simplicity. But to me, like this strategy is too simple. Like, it's too simple to me. Maybe because I've backtested it for a long and I stick to it for a long time. Okay, so I don't know. It's so simple to me. There are a lot of confluences to it, but to me it's simple. So you mark your fib 2. Map your fib 2. As you can see on this fib 2, what do we have here? We have the 0. That's, we mark it from the high, that's the strong high, to the low. We have your 0, we have your 0.5, you have your 70%, that's 7.7, that's 8%, that's, you have your 1. So one thing to know about this Fibonacci 2 is that from this your 0 to this your, oh god, for this your 0, damn it, sorry for this stopwatch trap rubbish, let me delete it. Good. All right, from this your 0, let me mark out the tool again, sorry. from this your 0 to your 0.5, that's the 50%, is what? Your discount price. If price is in your discount price is retracing to your discount price, we have no issue, we have no business in that. Then from this 0.5 now, to 1 is what? Your premium price. Let me mark it with another color, blues. From this 0.5 to 1 is what? Your premium price. Let me mark it out. Sorry, I cannot mark just this. Damn, this is the issue I'm having. Premium, 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 discounts, COUNT. Sorry for the, I'm using phone, not laptop. So once you have found your market structure range, sweep and break, the next thing is to mark your discounts and your premium. Once you mark your discount and premium, in fact, comot your fib. You will not need your fib tool again. Comot the fib. Let's remove this fib. Yeah, I'll get rid of the fib. Then the thing is, you have to draw a line on the 50% zone. That's the separate, to draw a line to demarcate it. So the thing is, we want to see price come to the premium, give us a reaction, confirmation before it moves down. You get? And remember, price is bearish. We find our bearish structure. So the reason why we are safe here is because price will never like to sweep out this high. Why? Because we are bearish. Price will always react from here and go down. Get? It is let's say 100. No, let's say 98% chance that price will ever sweep this high. Why? Because price has already swept out this liquidity first. So there's no need for price again to come and sweep this high again. So price will not come here, retrace, and go down. You get? For price to ever go up, according to ICT, for price to ever go up, it has to go down first. We shall see. For price to ever go down, it has to go up first. That's why there's a retracement in price action. So good, price we have to retrace to your premium price and go down. Nice. So that is just the premium and discounts. We don't do anything in discounts, we focus on premium. So now, how do we focus on premium price? What do we focus on the premium price? Let's say price, because on this setup now, on this scenario, we have two scenarios. We have the first scenario where price is approaching your premium price. Then the second scenario is now when price is already in your premium price. You get? So now the first scenario, let's take the first scenario. The first scenario is when price is approaching your senior price. So what do we do? What do we do when price is approaching your premium price? We look for liquidity inside the premium zone. We look for liquidity inside the premium zone. For price to sweep inside the premium, for price to sweep liquidity inside the premium, they move. You get? Because price moves with liquidity. Liquidity is somewhere that price will love to sweep and move in the opposite directions. You get? And the first liquidity we will ever think of is this strong high here. This strong high. But no, price will not sweep strong high because we are bearish. Price will always tend to sweep strong lows. So what do we do now? What liquidity? We find the liquidity inside this premium. What type of liquidity? You know all the types of liquidity. That's why I say this is an avant course. Double tops. You know double tops. Double top is double tops like this. That's internal range liquidity. That's what we're finding inside the premium. Double tops like this. Yeah. Price will always tend to come and sweep out this double top inside your premium. They move. Good. Then one kind of liquidity we have again. We have internal range liquidity. Internal range liquidity are the pullbacks when price is giving you your bearish displacement. So let me. I know you guys are confused like this. Price gives you what? A sweep. That's your structural intent. A sweep and a break of structure. This is the textbook version. This is how the textbook version imagine it. But the real life aspect on the chart, what you will see mostly on lower time frames is price will sweep this thing. It causes a break though, but price cannot just move down like that. Sometimes price will give you a tiny retracement, move, tiny retracement, move. I'm supposed to draw more. Sorry, I'll delete this. So this is the textbook version. Now the how price really moves in the market is that when price give you your sweep and break, that's your structural intent. When it's moving down, sometimes price will give you a pullback, and mostly all these pullbacks you are seeing, it happens on the lower time frame. On the higher time frame, maybe you saw your structural intent on the higher time frame on 1 hour or 4 hour, you might not see liquidity on that 1 hour or 4 hour. It's when you go down to the lower time frame like M15, that's when you begin to see the little pullbacks. You get? So when price is approaching, it might give you tiny pullbacks, calm down, tiny pullbacks, calm down. You get? So all these pullbacks after the displacements, they are what we call internal range liquidity. Internal range liquidity. Internal range liquidity. So now you have gotten your high and your low like this. Yeah, according to what I said, your high and your low. You have marked your fib from this high or this low. You have marked your 0.5% like this. You have marked your 0.5% and said, yeah, this is my premium, this is my discount. And first scenario, price is heading to your premium. So what do you do in this scenario? You look for the internal range liquidity. That's all these little pullbacks in your premium price, not your discount. If you see any liquidity in your discount price, ignore it. We focus on the liquidity inside the premium for price to sweep, then reverse. You get? Let's go back to this version. Yeah, very nice. So now prices, this is your premium, this is your discounts, and price is heading. Price is in the discounts, price is heading to your premium. So what do? We find internal range liquidity, all these tiny pullbacks, you get? So we mark out the internal range liquidity inside the premium. We mark out the internal range liquidity inside the premium. So once you are done marking out internal range liquidity, you know that, yeah, price is going to do what? Sweep this liquidity. After sweeping this liquidity, what do price do? It moves down. And you may be surprised, price sweep the liquidity, how do we enter? I'm coming to that. Calm down. Price sweep the liquidity, I move. How do we enter? Calm down. That's when we come to zones. You get? That's when we come to zones. Price will actually sweep liquidity, tap your zone and move. You get? So the thing is, we know the types of liquidity, but we don't know all. Number one is the double tops. And yeah, since we are bearish, we want price to sweep double tops. If we are bullish, we want price to sweep double bottoms and move up. You get? So now, first is the pullbacks, that's internal range liquidity. Secondly, double tops, we want price to sweep it and move. Now the double tops and double bottoms is inside this premium, not in the discount. Then the third type of liquidity is what? Sessional liquidity. I know some people will should be sessional liquidity. Sessional liquidity is your Asian highs, your Asian lows. I have this indicator which is called T-flab. This T-flab will tell you your sessions. You can see Asian high right here, Asian high, Asian low. This is London low. This is London low. This is London high. You get? This is London low. This is London high. London low, London high. You get? So that's the other type of liquidity. What kind of liquidity we have again? We have there are less of types of liquidity. We have period high, period low, trend line liquidity. But in this setup, you don't expect to see a trend line liquidity here. You get inside premium. You don't expect to see a previous daily high. It might happen sometimes, but most of the times it's hard to see a previous daily high for price to sweep and move in your direction. It might happen, but most of the types of liquidity we always see is sessional liquidity inside your premium. Those are the holy grails. Those are the bread and butter. Then internal range liquidity is what we see often. That's these little pullbacks. That's what we see often. Yeah. So now I've told you the first scenario when price is heading to your what? Your premium. Now the second thing now is a question, and I solved this problem when I was backtesting, because not most of the times, but when I was backtesting, because I backtested 100 trades, and at least out of those 100 I won 90 something. I mean, yeah, somewhere break even though. I won a lot. So inside that, when I was backtesting, I noticed that it's not every time price will be approaching your premium zone. Price might already be inside your premium zone. You get, this storyline stuff. We actually wait for rejection and the breakout, and the next day that's where we're expecting our price to go down. And as a trader on this strategy, there's something I didn't mention. I didn't mention that we are going to trade. We're going to trade just London and New York session. We're not trading Asia session. Never. You get. So there are some times that maybe Asia session might engulf and enter into this premium price. What do? We want to do what we call I don't know. I don't have a name for it yet. Yeah, I don't have a name for it yet. So what we do is, if price is already in your premium price, all you need to do is wait for timing. That's, you wait for London open, and you go to the lower time frame. Let's say M15 or M30. You go to the lower time frame, check for highs inside that lower time frame, and you take those highs as your liquidity. Either you take maybe all those Asian highs, or you take swing highs on the lower time frame as your liquidity. You get, and wait for timing. Timing, that's London open. We always sweep out those highs before it moves down. It's a must. It's a must. Price is fractal. It happens on daily. It happens on M30. They're all the same. You get, price must sweep it. Liquidity moves price. You get. So that's for that. I've given you the first scenario of our setup. Sweep break, price is heading to premium. Sweep break, price is already in premium. We all know what to do. If I say now that I should go and spot this on the chart, because I've been pretty much inside here like this. So let's see this EU. You can see this sweep break. This range is what I'm actually eyeing now on EU. This range like this. For this market intent, we have low, that's sweep and break. Because this is the sweep, this is the sweep, and this is the break. This is the break. What am I doing? This is the break. So I will mark my Fibonacci to the from the high to where, from the low to the high. We are bullish, right? From the low to the high. So for me to confirm that this low is actually a valid low, I have to go over to the lower time frame to check for a market structure shift. Or maybe just a bearish displacement. So let's check out for it. Yeah, we can also see that a strong low has been formed on the lower time frame. What is this? A sweep. That is retracing vigorously. It's retracing rigorously. Sweep and break. So we know that, yeah, cool. I'm drawing rubbish now. We know that, yeah, price is going to do what? I started retracing. So what do we do? Where the price retrace to? Remember, we saw the sweep and break on 1 hour. Where the price retrace to? This is current price action now. I don't know if I can share this setup to you later in the. I don't know. So what do? You mark your 50%. 50%. This is your 50%. Then what? Mark up the low. This is not how I do my setup, but I'm explaining it for you people. Like, this is not how I draw too much things on my chart to get. I already see it already. You get? Yeah, this is the premium. So this is what? This is premium. This is discount. Price is where? Price is what? Price is in what? It's in discount. So we wait. Find liquidity inside the premium. So the thing now is what is our what are we where are we now in the session? We are actually in what? In Asian session. Let me put it to lower time frame. Look at this indicator now. We are actually in the Asia session. So I'm expecting Asia to come into this and sweep what? Liquidity. Where is the liquidity I want price to sweep? Pullbacks, pullbacks, pullbacks. This is it right here. That's internal what? Range liquidity. And where is this internal range liquidity? It's inside the premium price. I see. I know you will say that, yeah, cool. We have another internal range liquidity. So which one do we pick? Which one do we pick? That brings me to what? The third aspect of this strategy. Where is of this indicator? See, I seen. Remember, I saw the clear sweep and break on 1 hour. And now I want to find internal liquidity in M30. M30 is clear here. That's why I say you should go to lower time frame to find the pullbacks. So now, if I say I want to find, remember I told you draw on liquidity. Draw on liquidity. Let's see if we can find draw on liquidity. Let me give you a trick to finding draw on liquidity. This is where price is current. This is our range, right? You can draw a high on this range, a physical line. So you know that all you want to do is to find strong highs here. Strong highs. See, you can see this is a sweep. I think this is a sweep, and this is a sweep of liquidity and a break of structure. And what happened? Price actually swept this sweep and break right here. That is why price is moving down. It reverses price. Are you seeing? You get? So sweep and break reverses price. So we can still expect price to get to this sweep and break again and still reverse. That's right here. You get? So you can find zones for reversals right here. All good. So now I find our internal range liquidity. Next, let's go back to the drawing board. Directional bias, storyline, rejection and breakout on the daily time frame. When you see your storyline for this day, the next day, that's when you expect the redirection to go. For example, we find our storyline today. You know how to find the storyline, rejection and breakout. To find the storyline today, we are hoping that the storyline plays out tomorrow. If you find a bullish storyline today, we're expecting that tomorrow is going to buy. But directional bias and your setup must align. If there's no directional bias, there is no setup. If there is directional bias and there's no setup, that's your sweep and break. We are not trading. Next thing is draw liquidity. When you find your daily reject daily H4 breaker, that's your storyline. What do? We find our draw liquidity, sweep and break in the opposite direction. You get? In the opposite direction, so that price will sweep it and cause a break. You get? Then the next thing is market structure intent. That's what I'm teaching you now. The market structure intent is actually correlating with what? Your storyline. But the draw liquidity, the sweep and break for the draw liquidity is not correlating with your storyline, because you want price to sweep that strong high. If we are bearish, we want price to sweep that strong low and go up. But if we are bearish on a norm, we want to see bearish structure. That's a sweep of a strong high and a break of structure. So the downside, making up your structural intent. Then the next part is liquidity in premium. We talked about all the liquidity. we talk about the first and the second scenario, when price is heading to your premium and when price is already in your premium. Then the next part is zones. So after you find your liquidity inside, after you find the liquidity inside your premium price, we wait for what? We mark our zones. Yeah, our zones. So let's go do this. Quickly. Let's go do this. And I'm going to look. I'm going to look at examples from this our setup we're finding right now. Currently, how do we find the zone? How do we find the zone? That's the question. How do we find? We don't find our liquidity now. We don't see price go sweep. For example, now let me draw this thing again for you. This is what sweep and break. Price is retracing, right? Let me draw it well. This is a sweep. This is a sweep and a break, right? So we don't mark our structural what? Our structural intent. This is your premium price. And so this is your premium line, your 50%. This is your premium and discounts. From year to year is discount, from year to year is premium. So now we have already spotted, let's say we spotted liquidity here. That's internal liquidity here. So how the zone, involving the zone, you know that when price is going to sweep out this internal liquidity, is going to reverse, right? So the thing is, we cannot just say price is going to sweep here and go to short from here. After price sweep it, we'll go to short, put our stop loss somewhere here again. No, that's not how we do. We are going to do what? We are going to find zones. You get zones above this liquidity, very close zones above this liquidity. When we find the zones, what do we do? When we find the zones, what do? We wait for price to sweep this liquidity, tap our zones, look for confirmation in the zone, and do what? Sell. Remember, what did I tell you? Zones, after zones, what? Confirmation entry on N5 and N50. That is my strategy. I know it will be like gibberish in your head right now, but I will explain it better if I use my laptop. It's urgent, that's why I'm using my phone now. All good. So let's go back to finding these zones. How do we find the zone? That's the question now. How do we find the zone? We find a zone by marking out key levels on the higher time frame. On the higher time frame, I mean daily, 4 hour, 1 hour. Sometimes I do take M30 key levels. And what are key levels? You know your key levels. That's the normal. If you are finding daily, you get daily. That's also a key level. You get. So we are finding key levels on the higher time frame to form a zone. So as this line here is a key level and this line is a key level. So two key levels overlapping together is what makes up what? A zone. And you might be wondering why I'm using this long line. That's why I love using. So let's go spot one zone, random zone. I'm not like it's not according to this setup. Let's go spot it. So this is the daily time frame, right? What is this? This is an SBR. Cool, very cool. This is a nice SBR, fresh. So for this SBR to become a valid zone, we cannot just take entry to this SBR. What do we need? We need to find another SNR level correlating with it. So this is an SNR. This is a gap. So SBR from higher time frame, that's H4. I mean SBR from daily plus gap from H1, H4. It now gives us what? A zone. This is what a zone. It's very simple. Very, very simple. And how do you mark a zone? You cannot just say, yeah, this is structure. Yeah, let's just find zone on everywhere and mark and start using. No, when you have marked your liquidity already, that is when you will now go and find zones close to that liquidity. You get? So two SNR levels make a zone, and we have different types of zone. We have daily zone. What do I mean by daily zone? DD zone. DD zone means the two key levels that form the zone is a daily key level. The two are daily key level overlapping. Let's go back to the daily time frame. Let's say you want to use this wide zone now. This wide zone. I don't like wide zones or anything. What is this? This is what a QM on the daily time frame, right? A QM. You should go and study your key levels very well if you are lagging with it. A QM. What is this? A gap, right? A gap. They are all fresh. So I can come out and draw this as my zone. This is what a daily zone. Why? Because the two SNR levels, the two key levels are from the daily. That's the first type of zone we have, a daily zone. That's the two key levels are from the daily. Then the second type of zone we have is the daily H4 zone. That's the type we marked just now. That's the first key level is from the daily, and the second key level is for the 4 hour. That's making DH4 zone. That's daily zone and H4 zone. That's daily key level and H4 key level makes us a zone. Then the next type of SNR level we have is H4 zone. It's not possible for you to get. It's possible though, but it's not what I use. For example, now you mark up a daily key level, you will now go and mark up 1 hour key level. It's wrong. You have to go one time frame lower. You cannot say you want to mark up a daily and 1 hour key level. No, it's either a daily on a daily or a daily and a 4 hour. Then it's only when you go one time frame lower. For example, 4 hour. Yeah, let's go to 4 hour now. I know this chatting is more of talking, less of activeness. So now what do we have here? What do we have here? We have a gap here. On this is 4 hour time frame. We have a gap here. And also we also have a gap here. So now this is a nice zone for us to do any gliberish with. What am I doing? This is a nice zone. A 4 hour, that's H4 zone. This is an H4 what zone. Very nice. Very nice. Very nice and fresh. You get? And one thing I love using this line. I love using this line a lot to mark my zones. Why? It can make me extend my zone to previous price. So now let's take this zone for example. If I extend this zone now to old prices, you might see how this zone has reacted from price before. This is where we are using it to. This is where we are using the zone here. But you can see what happened previous price. See how price rejected for this zone previously in price. How it rejected and moved up. One. Secondly, see how price again. This is just a normal zone that I'm just marking. See how price rejecting for this zone again. 2. Let's go. This is just a normal zone I'm marking. 3. See another rejection of the zone again. 3. Can I see the reason why I like using this line? Okay, this one didn't tap. These ones are just gliberish. See, it's rejecting from here again. 4. From this place. This place. 4. Here again. Let's go find. See another one again. Price rejected from this zone again. You can see it. This is nice. It's a nice zone. So now we cannot just say we want to the mark zone anyhow. Let's go back to our setup. Remember, you mark your sweep and break, your range. Your market intent. When you mark your market intent, draw your liquidity. After you have drawn your, make sure you extend this liquidity because you are going to go to higher time frame. Make sure you see it. So the thing is, we are looking for zones in what higher time frame. So let's go first to the daily. If you can see any zone, remember, look at your liquidity here. Look at your liquidity here. So I'll find a key level, 2 key levels below it, exactly below it. This one is not below this one. You can take this first. Let's go if we can find another zone again. Yeah, look at this SBR right here. Are you seeing that? Are you seeing that? And what is close to what our liquidity? So we can mark this as our zone. Can you see it? Can you see it? Or I can even delete this one and take this one. It doesn't matter because we're not taking direct entry for the zones. You get? We're not taking this now is an H4 zone. H4 zone. I deleted the daily. It doesn't matter because we're not taking direct entries. You get? We're waiting for what? Confirmation. So if we drag this zone now to previous price, let's go see how price have reacted to it in the past. Let's go see how price has reacted to it in the past. Let's do it well. Drag it to the past. Drag it to the past. Alright, this is our zone. This is our zone. Remember, this is our liquidity. This is the liquidity, internal liquidity. We'll still find zone under this one too. You get? So let's go and observe how price has interacted with our zone. I've not seen anything much. We can see. Are you seeing? Interacted with it very well here in the previous times. Very well. At least it gave us a reversal. As the zone is nice, it's a nice zone. And it doesn't mean that if you don't even see any rejection, because most of the times you will not see rejections, but the zone will still work. It will still work out. You get? You can see this sharp rejection right here. Sharp rejection. All nice. So the zone is good. So now let's go and find zone under this liquidity. What do we see? We see this key level right here. See this key level. Let's go to the daily. If we see something closer, your one is to find something closer. You get? It's far. Let's go to H4. Remember, we'll mark this key level on the H4. That's this key level here. Let's go to the H1. You can see that's maybe an H1, H4, H1 zone. What the closest zone we can see is these two right here. These two right here. This is a what? H4, H1 zone. This is the closest. This is the closest we can find. Alright. Mark it up like this. Yeah, I'll do what? This is what I love. My best part. Extend it to see how price has reacted. And it's not a must that if price has not reacted to it so many times that the zone is rubbish, still take it. So far it's close to liquidity, it might be the first time price want to ever react from that zone. So let's see if price has really price didn't do much on the zone. It actually gave us a reversal right here. It gave us a reversal right here. What did it do again? It still gave us small reaction right here. Let's see. What did it do again with this zone? What did you do with this zone, Baba? What did you do with this zone? My trading view is laggy. I'm not sure we'll get to this price action. It's laggy. Alright, the zone is nice. So what I'm waiting for is price to get to my premium. I'm seeing price is already printing now. It's already printing sales now for retracements. I want price. What am I doing? I want price to get to my premium, sweep out this liquidity, and you might ask, we have liquidity here for price to sweep and tap. Another liquidity again for price. So what if I can't enter from here now? and then price can't come here now, can't sweep. You have to be flexible. You have to be flexible, and that is why we have the last part of what my strategy, which is what the confirmation. Where is it? Where is my, yeah, the last part of it, my confirmation on M5 or M15. You get. So the thing is, the confirmation is so easy. When price now come to your zone, right? Come to your zone, what do? We wait for what? For confirmations. Wait for confirmations. And what kind of confirmations? We go to M15 or M5. What kind of confirmations will you see? We have different type of entry models. The first one is price taps your zone. All you want to see is a sweep and a break also. A sweep and a break. Price reaches this SBR. Let me make it clear again. Let me make it clearer. Now, price has tapped your zone. After price taps your zone, the candle that price used to tap your zone just mark vertical line inside. Then this is one side of the chart. This is the other side of this chart. The other side of this chart, you want to see the same swing pattern on the lower time frame. You want to see price just sweep a swing low, not just and not else any low, a swing low. It must be a swing low and cause a break. You get. The break might not be break of a week, it might be break of an SNR level, this SBR here. When price breaks the SBR, what do we do? Let's mark out the SBR. It's a key level. When price breaks this SBR, what do? We enter from here and what? We long. That's our entry. Where is our stop loss? That's your micro scaling. Your micro scaling. That's my risk or reward. We will now be crazy. You enter from this SBR. Then where's your stop loss? You know that this is a strong low. Price will not like taking it. You can put your stop loss just here to make it edible. Where is your target? Don't be greedy. You might like to target internal range. Oh my god. You might like to target what? Internal range liquidity. I do that most of the times, making my risk to reward to be crazy. 1 to 16, 1 to how many? I dey chop am. You get. But there are sometimes that price will actually mostly all those volatile pairs that price will just mostly like, oh my god, sweep it and it will retrace back. So me, I actually use what we call this the theory I use, draw on liquidity theory. Draw on liquidity where I want price to reverse from this sweep and break now. For example, now price comes here and give me this reaction. What I need to do is this sweep and break that price has given me, I can target this high here. You get. That's my entry and exit model. Sweet. Because sweep and break always tends to reverse price. You get. Strong lows. When price interacts with strong lows, when price sweep is strong low, there must be a reaction to the opposite side. You get. So that's for our first entry model, sweep and break. Then our second entry model is a refined model from how I have backtested. Sometimes when I backtest, I see that price will give me sweep and break. But sometimes price will just leave like that. It will not come back. It will break impulsively. It will not come back. So what I do is, there's no how price will just move in one candle and move up like that. You get. Price is going to do a retracement, and that retracement price is going to do, price is not going to come down to this SBR again. What is price going to do? Price is going to go back to the 50% fib. Remember, the price is going to that this thing now, it happens on either the 5 minutes or the 15 minutes. That's after you tap your zone. After, not before. Not this time. It has tapped your zone. You don't want to see this structure now before. It's after it has tapped. You get. So mark it. Where's your entry now? This thing is supposed to be higher. As impulsive move. When price gives you impulsive move without coming back to your SBR, price will now like come back. Let me draw this 50% where. Mark your fib. Where's your 50%? See, your 50% is right here. Yeah. So price will now come back to this 50%. Your entry will be on the 50%. On the 50%. What is your stop loss? This one you can always use a tight, very tight. See, in fact, my stop loss used to be on this 1%. If it's a fib entry, 1%, because price will always give you a sniper. In fact, 100% give you a sniper and go up straight. What am I doing? Go up straight, impulsively. You can target these highs too, these sweep break highs. You get. So the last type of entry, no, yeah. The last type of the first one, fib entry, SBR entry. The last type of entry is and the funniest thing, if you see this entry and reaction here, don't expect price to come here again to sweep this one. Oh. Price has swept it and bye bye. You, if you miss it, you miss it. And the best probability is, remember I told you we trade Asia, we trade London and New York. We trade London and New York. So the best probability is that price will always tend to sweep it in time. See, if you see 8 o'clock our 9 o'clock our time, that's New York open, London open. If you that's when we trade. We don't trade Asia. Rule. You get. So all these things you are doing now is inside. What I do is I actually open my chart. I wake up around, let's say, 5:30. I open my chart that time, plan my day, open my chart, look for setups. And nice. Let me show you my watch list. This is just what I trade. I trade silver, Euro USD, GBP USD, USD JPY, BTC, and gold. In fact, now in market just the milk anyhow, but no money to trade. By the grace of God, we are moving. We are going forward. So that is just it. This video is getting really long, really long. So that's all my. Let me recap it again. I'll be starting. Directional bias, daily reject daily is 4 breakouts. 1. Draw on liquidity, sweep break on the opposite direction. And the funniest thing, that your draw on liquidity now, how do we get entries on the draw liquidity? When you have marked your draw on liquidity on the opposite side, you can go and find a zone under your draw on liquidity, so that as price tap the zone of draw on liquidity, you find your entry and enter. You get. Then the next thing now is structural intent, liquidity in premium, zones, and confirmation. N5. Let me show you the last confirmation entry. The last type of confirmation. I told you the first and second. The first one is SBR entry. The second one is fib entry. The last one is decisional level. Decisional level is my, see, if I see decisional level entry anywhere, alpha price top my zone, sweep liquidity top my zone, and I see decisional level, I can risk my full account. I can, because to see decisional level entry is very easy, but it often forms. You get. I can risk my whole account. That one is no drawdown. The sniper is going to be massive, very very tiny sniper. In fact, sometimes you might miss it. So what's the decisional level? If you know your gap, you know we are bearish, we are bullish. You want price to, like, let's take this as our zone now. Let's take this as our zone. So this is our zone, right? So how's the decisional level entry? When price taps your zone, you're going to put a line. So you are looking for decision level, everything inside this part of the chart, not this part of the chart. You get. So what do we do now? Decision level is a gap breaking a gap. For example, now price is heading down. Price is heading down on the candlestick, on the M5. This decision level now is only on the M5, not the M15. So this is a gap. What we need to see is a gap breaking a gap, breaking a what? Another gap. this is the decisional level. This is nice. So you mark the gap level here, mark the gap level here, mark the second one here like this. This is what's your entry. This is your entry. Very sweet. So as price breaks it, what do? Long. Why is this a short? We long from here. We long from here. Gap break gap is easy. You want to see a gap? That's these gaps. This gap break a gap. And some people it will look. It's not an inverse fair value gap. Oh, please. Gap break gap. Let me show you an example of gap break gap on the M5. Where do I spot it now? Alright, this is a gap, but this one price is not actually retrace. Oh my god, price is not actually come. This is a gap breaking a gap, right? This is a gap breaking a gap. That's why I say this one you might miss it because the sniper is too much. So what you need to do is price retrace here and go. So that is my stuff. And I think let me show you some of my setups I took recently. Some setups. This EU setup is actually a decisional level. I seen it. This is a gap break gap. I just entered immediately and it sold retraced. I targeted 1 to 4. This is my decisional. This zone you are seeing right here at the bottom is my drawn liquidity. I mark zone below my drawn liquidity. There are a lot of entries, like this was it. A lot of entries I've taken, so many. These are things that I have backtested. I seen backtested a lot. Screenshot on my backtest. You get all these are my entries. But this one, sha, I screenshotted it on the 30 minutes time frame. That's why you're not seeing it. Observe. I seen this is a gap break gap. You retrace to the gap break gap and I entered ASAP. I seen it's sweet, right? And then look, this is my 7 edge flow chart. This is what I use. D1 number 1, storyline check. Number 2, identify draw liquidity. Number 3, draw higher time frame zone. Number 4, clear structural intent, bullish or bearish. 5, highs and lows plus 50% fib. 50% C, confirm lower time frame to confirm the highs and lows. Higher time frame and lows must form MSS, confirmation swing range. You get. Then what again? Scenario 1, price not in premium yet. These are what I just told you just now. Scenario 2, price already in premium, wait for timing, look for draw liquidity. You get. So this is how I do everything. Basically, that's how I do everything. So I'm ending this 1 hour long video. Right.